Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the live futures, Forex, and stock market scan. Today, we're going to go ahead and do some trade updates. We've got a few trades that are live. One worked out, one didn't really work out. We're going to look at that Aussie CAD trade and break that down, what exactly happened as it broke above last year's high and is still on the rally, trading around 92.88. Not real happy with the price action there, but the trade did go positive by quite a bit before reversing out, which is sort of to be expected with a commodity pair, especially when you see gold and silver and precious metals in the shape that they're in. So we're definitely going to get started there. I think it's going to be a pretty good trading year. I'm very excited to be here. I think we're going to be in for some really great trading. U.S. oil still sort of finally catching some of that bearish tailwinds that we believe is going to dominate the market in the wake of Maduro's capture from Venezuela. You're starting to see U.S. oil really lose the handle on 58. That's a big deal in my view. And then also gold. We've got a trade idea for gold. We had a Euro USD idea that cashed in. This is a full Forex futures and stock market scan. So whatever you guys want to look at, feel free to let me know. I'm more than happy to look at any market that you'd like to. We can dive into really anything you want. I can answer some questions. I think this is another live, active day on the markets, and there's just no question about what's happening here in the U.S. stock market. It is shaping up to be very, very bullish. Once again, we're up about 1% here in the Dow Jones Industrial Average. This is a good look at sort of some of our technical analysis we put out there in our Switch Markets newsletter. Our picks to click, or our picks of the week, as I like to call them, is US 100 was one of them. And if you remember, the monthly pennant is a very, very strong signal. It's a very strong signal because it shows the trend, it shows an area of compression, and potentially identifies where we could be breaking to the top side. Because the participation is very, very heavy right now. We are seeing a lot of people trading, and that is not really it's not a surprise. It doesn't come as a surprise right now because we're starting off the trading year. So everybody's in the market right now. Retail traders are back. All the institutional traders are watching their charts, and they're ready to trade, trying to make their yearly goals as well. And right now what you see is a monthly pennant, the monthly bullish pennant really developing in the US 100, and that spells probably a bullish breakout. And typically when you see a monthly bullish pennant, something like this, you're not just going to go higher by a little bit. You're going to go higher by a lot. Now, we saw a beautiful bullish pennant develop over the summertime months in gold. We're going to go ahead and cover gold here in just a second, but that bullish pennant really was a surprise that it took so long to break out. But when it did, I mean, we took out some key levels and just skyrocketed to what many believe is going to be a hard test of 5,000. I don't really think there's any debating that now. Silver, huge market in silver right now, up to $80, $81, up another 6%, rocking and rolling. I mean, absolutely fantastic action in silver. Crypto sort of taking it on the chin today after a big day yesterday. Not really seeing a whole lot to write home about there. Bitcoin's off a couple percent, Dogecoin's off, Ether's off, Shiba's off. So for me, I'm just sort of watching in a holding pattern for Bitcoin and crypto right this minute. I do believe we'll get a reversal, but I think that the long-term prognosis to the top side is pretty good for crypto. So I want to welcome everybody back to the trading room. Good to see you. T Marina, good to see you. Hi, Shane. Hi, all. Hi, T. How you doing? Shane, can we check out CEG and NVIDIA? Yeah, we can do that. That's no problem there. Yes, sir. Hey. How's it going? Yes, sir. Always a pleasure. The How to Trade community, great to see you guys. Bobby Bob, good to see you. Tuku, always a pleasure. Tuku, Lita, Steve Francis, good to see everybody back in the room. I got some great messages during the overnight. Fantastic stuff. So I do really appreciate anytime you guys want to reach out. It's fantastic. I'll get right back to you and help you as best I can. Had some great conversations with traders yesterday, or late yesterday. Really a great way to start the year is through really taking a self-inventory on your psychology and where you're at psychologically. So the tip of the day, we're not going to pull up a slide. I'm not going to put a slogan out there. The biggest thing that you need to remember about being a trader is this: take your money, pay yourself for your time. It sounds easy, sounds simple. Well, of course I'm going to pay myself. No, pay yourself for your time. Now, when you trade and you take money out of the market, there's a lot of things that come along with that. Some folks feel guilty about taking money out of the market because when it's going right, it's easy. That's the truth. You'll show up to trading days where you can do no wrong. A lot of people feel guilty about that because of their attachment to money. Maybe they've always had to work 12-hour days to make $100 or $80 or $50 or $30. Maybe their parents were hardworking people that had to work very, very hard to make a little bit of money. Maybe their grandparents sort of leveled up from the middle class or lower class and just were very, very poor. That is a difficult thing to get over. I'm from a blue-collar family. Money never came easy to our family. We always had to work. We always had to hustle and work hard. That was the deal. And when you go into the markets and you make a great trade, you say, wow, I just made $1,500. And you think back and you say, boy, I would have had to work I would have had to work a month to make that. When we lose it, we feel bad. We say, oh, I shouldn't have lost that money. I should have kept it. But what about when you make it? You could have everything right in front of you. You could have a strategy that works on paper. You could have everything ready to rock and roll. But if you have a problem paying yourself and taking money out of the market, you really got to work on your psychology. That boils down to self-worth. That boils down to confidence. That boils down to believing that you deserve what you're getting. I talk a lot about having a winning mindset. Talk a lot about what a losing mindset is. And there's all different ways you can lose money. You can get wrapped up in the cortisol and the stress and just let the markets beat you into nothing and chase and overtrade and over-leverage and do all the things that we know we shouldn't do. Everybody here knows not to overtrade. You guys know that. Don't chase your money. When you lose, the best thing to do is to put a tourniquet on it, come back when you have a great trade setup. That's what I was taught. It said, Shane, when you get your clock cleaned, you wait for a premium setup, and then you go right back in there. What you don't do is you don't just take the next trade that comes along. You don't take a subpar trade. I think we all know that. What happens when you win? How do you feel when you win? Do you feel like king or queen of the world? Do you feel great when you win? Do you feel guilty when you win? Do you feel like you're putting one over on somebody, or you're cheating, or that you're lucky? Get those thoughts out of your head right now. January 6th, 2026. Believe me, there is a ton of money in these markets. The institutions, the powers that be, the governments, the people that run this world with billions and trillions of dollars have seen to the liquidity of these markets. There is so much in there you could nibble around the edges for the next 500 years and never even make a dent in it. If you go into the markets and you take the money out, you deserve it, you appreciate it, you know that it wasn't luck, it was hard work, and you don't look back. That's my pep talk for today. I should have given it yesterday, but we got way too into Venezuela, so we had to give it today. It's good to see you. We got more folks showing up. Joshua, good to see you, Joshua. I see drunk comments. I love it. Drunk comments, good to see you. Always a pleasure. Andy Tong, hello, Andy. How are you? Let me see. Yes, sir. When I win, I'm happy. When I lose, I feel sick. Well, I'll tell you what. I had a little bit of cash in play last night on the Illinois State Redbirds, and I had them at 3-1 to win the game, and we should have won the game 3 different times, and Montana State ended up getting, I won't say getting lucky, but they pulled one out after 2 block kicks, and that one stung. So I didn't feel real good about it afterwards, but you work through it. You're back in front of the screens today. You feel good. And remember, gambling, casino gambling and sports gambling is not trading. Money management and casino gambling and sports gambling, very valuable skill to apply in the markets, but it's not the same thing. It's not the same thing. In trading, you can control what you do. You can't control the market, but you can control what you do. In gambling, you have no control over anything. All you can do is control how much you bet. So, I don't know. Entertainment value only. That's what I highly recommend. Let me see Andrea. Good to see Andrea. Welcome. Ralph H. Good to see you. Okay, guys, let's go ahead and get started here. Remember, if you want to get active in the markets, head on over to switchmarkets.com. They've got you covered. Thousands of global markets. There are winter specials rolling right now. I think that's probably a pretty good place to begin. I mean, everybody seems to be getting back into the markets this year. It's going to be a great year to be in the markets. If you're looking for a broker and you're in a supported municipality, be sure to check out Switch. They've got you covered. Tons of free resources. These are new additions. We're building these out all the time. Free EA tools for traders, trading journal, market movers, Forex, and there's just a ton of trading tools here that are all complimentary. So market heat map, Forex swap calculator, you name it, they've got it. So you definitely want to check that out. And you see right there, 8 days, 12 hours, 50 minutes, 6 seconds. There you go. You got a special too. They'll boost your liquidity, that's for sure and certain, and your purchasing power, which is what trading is all about. Euro USD, we had a fantastic trade that came across the board. I always love to win the first trade of the year. In this one, we really weren't fortunate. This was one of those trades that came down, really drew against us a little bit, but then it came right back up and hit our profit target last night. Well, during that Japanese session, right after the Tokyo Open, about 90 minutes after the Tokyo Open, there it was. We had the TP, which was fantastic, and now price is back down to where it was Well, basically when we took the trade. So you really can't beat that. The second one, not really the best story in the world. I'm not overly happy with this trade, but there are some teachable moments here and a few things to look at. We were looking to sell right in front of 2025's high in the Aussie CAD. The reason why we chose this pair was because the market's active. The commodity markets are active. Gold's active. U.S. oil's active. Australian dollar's correlated to gold. Canadian dollars correlated to oil. It's where the rubber hits the road. And we were really looking for a situation where maybe that stronger dollar that we saw after Venezuela was going to give us a little bit of a bump off of last year's high. And it just didn't really develop the way that we thought it would. Let's go right out to the price action. You can see there's 2025's high marked on your chart, 92.57. There was our entry right around 92.49. Now, this was one of those trades that we were looking for we were looking for 40 pips. Somewhere in that zone, 40 pips. Well, this low right there went right down to 92.41. So we got a little bit of action, a little bit of positive action there, but really not much. So we did go positive by a little bit. Excuse me, that low right there is 92.32. So that's about a 17 pip move. Is that good enough to take? Can you move to break even? What I always say is if you move to break even, be consistent, do it every time. And, sometimes it works for you, sometimes it doesn't. This particular trade, I was looking very, very good right there, right around that Tokyo Open yesterday. You could see that we were in pretty good shape. And then what happened? The gold market just started taking off. Once again, you had a chance to get out at break even, maybe plus a few. And then once we finally broke during today's U.S. session, it really has just been all bullish. So basically 1-1 on the year. We're probably not going to keep a running tally all year because we have hundreds of these things. But this is one of those trades that could have probably been a pretty good trade for somebody that was looking to scalp, 10 or 15 pips. But as far as a sort of a short-term position looking for 40, it just didn't quite work. And the bottom line is this. Typically, when these areas break and you start to trend, you just get out. So our out was right about where the market is now, 92.89. I'm more than happy to take that off. Honestly, you probably could have expected for this trade to be a loser once that swing high was gone. A lot of times you'll get a trade like this that'll go positive, then it'll go against you, and then back to break even. Typically, in that situation, if you're back positive, you can look to tighten your stop loss up and probably make this more of a 1-2 type of a trade. I don't have a problem with that at all. Just be consistent with whatever strategy you decide to go with. So let me see, Bobby Bob, psychology session is my best session. That's fantastic. We'll talk more psychology if you like. Like I said, I'm an open book. You ask me anything you like. I saw this story a little bit earlier today. I heard some people talking about it, and I didn't really know that it was that bad on the internet. Bots make up over half of all internet traffic, with recent reports indicating around 51% automated traffic surpassing human activity for the first time, driven by sophisticated bad bots. So why would I even bring that up? Because we're real people here. This isn't a bot. This isn't AI. This is the real deal from Dillon, Montana. Definitely, if you have a question, you can ask me that. Now, the problem, if you go to ChatGPT and ask about your psychology, or maybe if you ask, run some online searches on what should I do? How should I handle this psychology? There's a good chance, there's a 51% chance you're going to have a robot telling you how to behave and manage your emotions as a human. I can tell you from 15 years of experience, you want to talk about losing, we'll talk about losing. You want to talk about winning, we'll talk about winning. You want to talk about how to try to keep your head on an even keel, be a real even keel type of a trader. We can talk about that too. Hormones, everything. Stress and dopamine, cortisol and dopamine are everything when it comes to keeping a great mental mindset. Remember that. So the next time you Google something, the next time you run a ChatGPT search going, I'm having trouble chasing losses. What should I do? I don't feel so good after a loss. What should I do? Remember, there's a 51% chance it's a robot talking back to you. And in ChatGPT, it's a 100% chance, and it's just going to conglomerate everything that's on the internet according to your query and try to go ahead and solve the problem. Something to think about there. For me, I like the idea of if I'm going to learn to trade, can I learn to trade from a robot or like a robot? If I'm going to do that, I might as well just get an automated system or a system and automate it. That's all really there is to it. Okay, we have some requests here. Let's see. What do we got? Let's see. TM, can we check out CEG and NVIDIA? NVIDIA is interesting to me. NVIDIA Constellation Energy, we'll go ahead and check that out right now. Anything energy, Team Marina, is going to be something that's going to be active. right now it's going to be active. You can see, okay, this is very, very interesting. So you've got CEG right here. Nice compression, nice real sort of the alligator's mouth is closed, meaning we're very, very tight here. We're very, very tight. So that theoretically suggests that a breakout could be on the way. Now, if you're looking at yesterday, nice big sell-off, and now you've got another sell-off, more than likely if this is an energy company, there's going to be two type of energy companies involved in the Venezuela sort of, I don't know what you'd call it, grab, development. Rebuild, whatever you want to call it. There's going to be two kinds of energy companies. There's going to be the ones that are in on it and the ones that are out. And that's like that old Wall Street movie with Gordon Gekko sitting there saying, hey, listen, if you're not inside, you're outside. Well, if you're outside as an energy company on that deal, that's going to really hurt your valuations because a lot of the other companies are going to go down there and they're going to use something called mark-to-market accounting, and they're going to value those projects 5, 10, 15 years coming this way, and they're going to value them right now. So you've got to really be careful with trying to pick energy companies, especially in this dynamic. If you're not inside, you're outside. And if you're outside, you're going to miss the bonanza. So picking energy companies is going to be a very, very delicate thing. I'm going to leave it at that. All right, so right here, CEG, so we're coming off hard, 3%. You got another 1%. So the first thing I do when I see a daily chart like this is I'm going to want to back off. I'm going to back off to say weekly. Like say we already got some sweet analysis there. Let's go. That was probably from last year, a couple years ago. I haven't looked at CEG in forever. Something like this though. So number one, beware when the earnings are coming. 19th of February. All right, this is an interesting type of an area right here. This zone right down in this. You can call them liquidity grabs if you want. I just call it pretty much the line in the sand would be that spike low. So 325-ish. I mean, it's not really a coincidence. We're lining up on quarters. 325 there. So there's your spike low. There's your spike high. And what do you have? A lot of compression right in this zone. 62% will be a big deal. 338. Not a bad bid. Don't be surprised, though, if you wipe out some of these retail longs, maybe beneath that spike low and get a shot at like 320s. You still probably want to be long energy companies as a whole, but some are going to perform much better than others. I know that's an obvious statement, but it's very, very, very real. And what really is difficult is just diversifying across the board. It takes a tremendous amount of money to buy the entire energy sector. I guess you could take an energy ETF, but the tracking errors and the fees and everything, I don't know. I mean, that's all. The ETFs are a delicate business. If you don't know what I'm talking about, don't worry about it. So I'd be looking like 338 there, maybe 320. I think it's worth waiting, worth holding out for there. Maybe even 300 if you get an opportunity to make a run at those September lows. Definitely possible here. Definitely possible. Horrible open to the trading year for CEG, down almost 5%. Let's see, what else did we have? We had NVIDIA. NVIDIA is interesting because of the China-Taiwan situation. And when it comes to tech and chip makers, you're going to have really some trouble if China decides to go into Taiwan. A lot of people believe it's on the way. It's unavoidable. A lot of people don't. A lot of people believe. I heard today a gentleman speaking saying, listen, China may not have the energy after losing exports from Venezuela and potentially Iran to launch a large-scale invasion. I don't know if that's the case. I really don't. But what I do know is that if Taiwan comes into play with China, you are going to see a ripple effect go across big tech, chip makers, semiconductors, big data, you name it. Anything relying on tech that is remotely related to Taiwan, you're going to see a ripple effect there. NVIDIA is off a little bit to open the year. I wouldn't panic. Still very bullish here. This is sort of a nice big Fibonacci retracement sequence. Clearly, we built that on a monthly chart. So let's go to our monthly and sort of take you back a little bit, and we can go ahead and see exactly what's cooking. I mean, it's beautiful market structure. Spike low there to a spike high. All right, there's your pullback. There's your zone right there, and you're rocking and rolling up towards $200. Now, for me, this monthly, I would be looking at 164. You've got a 13-month EMA right there. That's a beautiful thing. I would definitely be looking at that. That area right down there, 165, is probably the buy of all buys if you're lucky enough to get it. I shouldn't say lucky. I'll say fortunate, if you're fortunate enough to get it. If you have the discipline, if you have the tools and the talent to wait around for that buy, you may get it. This, probably a more aggressive play, 185 by bids. I want to be on the long side of this market. I I want to be very, very careful shorting anything to do with big tech, especially with the NASDAQ, that big bullish pennant I was showing you. It's not that the US 100 index itself can drag all the stocks higher. Remember, the stocks theoretically drive the index higher. But when sentiment gets to a certain point, it's just like, okay, buy the NASDAQ, buy the US 100, and NVIDIA is very much a part of that. So you want to be careful with what you do shorting these things because the market sentiment is up, and a lot of that's based on interest rate expectations, and we'll cover more of that as the year blows on. So I hope that's a good look at NVIDIA for you. I'm bullish. I don't see really any reason. If you want to maybe look at a topside target, you'd be looking potentially at 185 bids. And your top side's probably somewhere up around 210. So the quick and dirty math of that's about 25 divided by 185. Get out my Casio, my old school calculator. So if you pulled $25 off of 185 bids, you're looking at about 13.5%. That is not a bad thing. Not a bad thing at all. So I still have my little calculator that I had in college. my arithmetic calculator, you bet. I've had that thing forever. But that's a pretty good look at NVIDIA. Be careful shorting. Be careful shorting. Those things have an incredible explosion to the top side in them. It's just a matter of when. Probably on your first rate cut or maybe when they replace the Fed chair, which I think is going to come sooner rather than later. We'll talk more about that as the Fed meeting approaches later this month. Let me see. Nico Letterman. Good to see you, Nico. Yes, sir. Nice speech. Thanks. It's pretty good. Let me see. Juju. So basically trading is gambling. No, I don't see it that way. Juju, trading, you have control. On that Australian Canadian dollar trade, I had control, meaning it was up to me how long I was going to stay in it when the market was against me, and it was up to me how long I was going to stay with the trade when the market was with me. Now, because of that decision, I can switch the probabilities in my favor. I can wait for bigger moves that theoretically are going to give me a bigger payoff over time, or I can go for tighter moves that are going to give me a higher win rate. When you gamble, and I'm going to throw out things like lotteries and slot machines. I understand. I mean, we used to call buying lottery tickets an idiot tax where I'm from. What, did you pay your idiot tax today? Yeah, I paid it. You're buying lottery tickets and slot machines? I mean, that's great. I mean, I hope you win. I really do truly hope you win. You're not going to win. But if you do, hey, you get to go buy a car or do something nice. Throw those games out. Let's talk about something like a blackjack or a roulette. You have no control. The only thing you can control is how much you're betting. People are going to argue with me on blackjack. Well, you can count cards and switch it in your favor, or you can play basic strategy, which eliminates the house edge to like 0.5% or something. And I go, yeah, you can do all of that. But even with basic strategy perfectly, you're still sitting at the table with a negative expectation. In trading, you can build a positive expectation. And what I mean by that is you can risk a smaller amount to win a bigger amount. You can risk the same amount as you're looking to take out of the market, and you're going to have the ability to make decisions while those positions are open. Take a look at my wager last night on Illinois State. I was stuck. I bet them to win 3-1 odds. I was stuck. I wasn't doing any in-game trading or betting or anything like that. I placed the pregame trade. I was stuck with it. If it came out my way, I was going to get paid. If it didn't come out my way, I was going to lose. I couldn't control what I did during the game. So at the end, the odds were very, very high. Illinois State was going to win that game, making a field goal at the end or maybe getting a first down, run the clock out, whatever. Very, very high. I didn't have an opportunity to take my money out right there. Now, I could have done all this other intra-game gambling and stuff, but I didn't even bother with it because, quite frankly, I don't have the time, and I didn't really care that much. So that's the deal. So if you're playing blackjack, you're in trouble. If you're playing roulette, you're in bigger trouble. You can switch the odds in your favor on a craps table by taking odds and betting behind the pass line at like 3-2, I believe the odds are. And if you get on a 6, 4, and 8, you got a pretty good chance to make money over the long term. But to be really honest with you, as soon as you establish yourself as a good craps player, they're not going to let you play anymore. That's where the markets are different, and that's why they're not a casino, and it's not gambling. You can show up and beat these markets every single day for the next 10 years, and nobody's going to make you stop trading. Your broker may say, well, we're going to do this. Go find another broker. There's a million of them. Realistically, that's the game. That's why it's not gambling. Don't think of it as gambling. Very, very different. Very, very different. So to answer your question, and it's a good one, It's a good one, Juju. Thanks for bringing that out. Let me see, Steve and Market. How many pips did it draw down? Let's see, the Australian dollar, Canadian dollar loser was 40 pips. We were looking for 40 and 40 there, and we ended up, I think the trade at one point was plus 17, which honestly just really isn't good enough in my view. It wasn't the move I was looking for, but, got caught up in a trend. That's life. Let me see. CEG is the number one energy supplier in the U.S. Curious then why their stock's going down. It'll be fascinating to see who gets the contracts in Venezuela. Let me see. T. Marina, thank you. I was checking out that top area of 38. Absolutely. Absolutely. You're welcome. Trading's not gambling when it's done properly and leaving emotions out. It's definitely more gambling when you trade off your emotions. As soon as you get emotional in trading, you're in big trouble. Now, you're always going to get emotional. You're always going to feel something when you win and when you lose. Your job is to manage those emotions. Manage them. Don't let them get the best of you. Don't let them get the best of you. It's hard not to chase. It's hard not to pile on the leverage when you're losing to try to make back your money plus your targets. I get it. Simple rule of thumb. When you're losing, reduce your leverage and cut it off. Bottom line. When you're winning, raise your leverage and let those things run. When you let a position run and you go for the big money, you do it with someone else's money because the probabilities, your chance of success is lower. All right, let's go right here. Trade update, 4,500's back in play for gold. This is a trade idea that we put out a little bit earlier, and we were already very, very close to getting this filled. Right now I'm looking at 4,500 as the key level in gold. Now, it's a big round number. We traded this one already this year, so it's not necessarily the best resistance level in the world, but it is interesting. So when we're looking at 4,500, you can see this 30-minute chart. This bar right up there was 44.94. Our entry point was right around 97 and a quarter, so it was very close. You still might get this today. One of the things that I don't like about this in the way that this is setting up is you're seeing the compression right in front of the key number. Sometimes this can be the precursor to a breakout above the key number. In this instance, I don't believe so because I don't think we have that much participation left in the day to really drive us definitively above 45. But right now, you're starting to see that compression in front of the key level, and a lot of times that's evidence that a breakout is building. So I wanted to go ahead and throw that out there. 97 and a quarter-ish is what I'm looking at, but you may have already missed it. It may not be a bad idea to pull it. For me, I'm just going to go ahead and ride this one out and see exactly what happens. I'm at 45. There's going to be sellers there, but once 45 is gone, more than likely, we're going to go all the way up to our all-time high and test it out. Don't be surprised if it happens really fast. There's a bit of a void in there if you want to go to the long-term charts. There's a bit of a void between 45.50 and 45 even. You can see right here. Actually, the weekly chart gives us a better illustration of that. Okay, there it is. Top, retracement. You're sort of coming right back up into that zone. And, odds are it's not going to be an easy ride to break out through these zones. But once it happens, probably 47.50, I would be looking somewhere up in there. And then once that's gone, 5,000. And I expect a serious war to be fought at 5,000. I expect sellers to step in. I expect profit taking. I don't know how many bidders you're going to find at 5,000 for gold, at least not right now. So I'm interested. I think that we're going there. I don't really see any way around that. You'll notice on the weekly, nice compression, even though it's a holiday season, nice rally, pullback rally. We'll see what happens. That's for sure. All right, let me see. Eyes hazy. Even in live gambling, they don't let you cash your winnings that easy. Live game gambling, they don't cash your winnings that easy. The problem you run into the intraday or intra-game football markets and gambling and things, liquidity is always an issue, and also the time delays. The games move so fast that a lot of times you'll see the sports books will freeze them. They'll freeze the lines. And I haven't really done it much. I go to football games now. I used to bet a lot on them, but anymore it's just sort of a hobby for me. I don't like putting that much time into them because there's just your brain power and your energy is better spent in the markets, believe me. Now, if you're a professional poker player, that's something different. Personally, I just have never had the patience to sit in a casino playing poker for 10 hours. I've just never had it. Never wanted to be there. That's for sure. Let me see. 512 Eli, Great Britain pound, Japanese yen is at an interesting point. Yeah, let's go ahead and check it out. Great Britain pound, Japanese yen. That's exploding to the top side. So, if you were long, you absolutely crushed this. The first thing I do when I see a big runner like that outside of the top Bollinger Band is try to figure out some historical reference. Where can we reference this thing? Well, I mean, that's an interesting swing high right before the major dump back in 2008. I remember that. The high right there, you're somewhere right around 215.88. So you definitely want to keep an eye on 215. And then these highs, these epic highs back in July of 2007, up around 251. So the question is how high are we going? Boy, this is interesting because we talked a lot about the yen. We talked a lot about the BOJ raising interest rates and everybody else is sort of cutting rates. You've got to think this market's looking for a top, right? You've got to think that. Well, I mean, what did you have right here? You sort of had a nice big top that developed back in 24, and then we just sort of went sideways for almost 18 months, and then there's your breakout. A little bit over a year, maybe 14 months, but there's your breakout. So for me right now, I mean, it's big round number time. I'd be looking at 215 even as being a potential resistance zone, not necessarily anything fancy. But just sort of a nice short-term resistance zone similar to what we just looked at 4,500 for gold. So interesting, very interesting stuff. 215, 211.6. Probably want to sell right up in here at least for like a scalp. But a bid, if you definitely want to be bidding if you can do it. Way down the queue, 206. Let's go to a weekly. Interesting. Couple of weeks, really slow liquidity, not many traders in there. There's your spike high, the pullback. Are you going to get it? 207-ish, 207.15. It's way down the queue. So for me, I mean, if you wanted to trade right now today and have a short-term scalp, 4-hour chart, $50%, probably be waiting for 62. I want this market to do something before I get involved. It looks like the moves are pretty much over. I mean, this 38%, theoretically, you could take a bid right now and just try to ride that thing back up to 212. But, the real question is there any follow-through in this market? And I probably would be leaning towards no for the rest of the day. I think it's really going to flatten out. And you'll be in this one probably for a day or two if you took it on that 4-hour chart. So you definitely want to be careful there. Great Britain pound, Australian dollar. Yeah, we'll go ahead and take a look at it. Okay, there's your plunge. You can see we had all sorts of great 62% level we already had marked. That was beautiful. Let's go step back to the 10,000 feet. Take a look at what's going on. Okay. So you sort of got a nice swing high right there. The April crash, the tariff panic. Not a bad range to work with, really. You go from October of 2024's lows right up to those epic highs, something like this. 62%, probably a very big deal. 2008. Interesting zone. That'll probably be my line in the sand. I think that if you break beneath that, you're probably going a lot lower. Clearly, the big round number is going to be 2 flat, wherever that may be. 2, something like that. That's where it's going to be. So definitely keep an eye on that type of thing to the downside. If it breaks, it could break, and it could break really hard. So you definitely want to watch that. Let's go ahead. I forgot to cover silver. Let's cover silver, and then there's a couple that I want to show you on the 920 that may be pretty good. Key levels 80. We talked a lot about 80 yesterday, and that's exactly what's getting challenged right now. We had sort of a high today of right around 81.50. And I mean, this is just nice compression up here. 80's sort of digging in, is being legitimate topside resistance, but boy, it's really difficult. I mean, really difficult to be selling this market right now. Intraday traders are doing just that. This would be sort of the beginning of your U.S. session, opening bell ding ding on Wall Street, maybe something like that. It would be really hard not to buy 80s. Really hard. And if you want to get more current, with the intraday stuff, 78% is right there at 80.02. Still have to be bullish. You're up 5.2%. I mean, holy cow. Probably any excuse to bid right now, I would think. I think the short-term selling, maybe just some day traders taking profits off the board. I'm not really sure that much is driving this downside move at all. I mean, it certainly is counter trend, and it's a very, very stiff trend. A very, very stiff trend. So interesting stuff right there. 80 would definitely be the bid that I would be looking at for silver. All right, week one. Remember, not really much going on today. That's why we just did a market scan. Is German CPI, S&P Global PMIs. Not much there. We can go ahead and hit the S&P Globals. The Globals, this is basically just an index, an aggregate number, a decimalized figure that's going to show you the relative strength or weakness of the U.S. economy. I wouldn't get too carried away with it. I really wouldn't get too carried away with it. I don't think it means anything. One thing that I would be looking at a little bit is the API weekly crude oil stock later today. A lot of emphasis is going to be on crude oil because of the Venezuela thing. Anything that's going to suggests a shortage or builds here in the United States is going to probably have some sway on the oil market. So be very careful if you're trading a little bit later this afternoon in that oil market. If some sudden volatility comes in and you don't know where it came from, it probably came from the API weekly crude oil stock. Remember, tomorrow is going to be the EIA crude oil stocks number in the morning, 10:30 a.m. Eastern. Be ready for that one. That could shake things up. You definitely want to be careful if you're in that arena. This right here was our PMI breakdown. I was going to spend more time on it, but there really is no reason to. This was sort of from the horse's mouth, S&P Global. This is interesting right here. Let's see. Beneath the initial market estimate, new business growth dropped to its lowest in 20 months, with panelists noting higher uncertainty in market demand and lower consumer spending, citing tariffs as the key source of instability. I don't know if you believe that or not. I don't know. I know that new business growth, that sounds about right. Lowest in 20 months. You sort of are coming off of a rate tightening cycle where interest rates have sort of been held a little bit higher than a lot of other places in the world. And you typically see those effects, 12, 24 months down the line. And right now the capital just isn't there for new startups. At least it's not as much as it's been in the past 5 years. So that shows you right now, you drop to its lowest in 20 months. Is that a big deal? Not necessarily. Not necessarily. Don't get too carried away with these figures. These are more for economists and folks that need to fill an hour on CNBC. They'll come on and talk about, well, the S&P Global PMI, and I go, whatever. Is the market up or down? Are we seeing bids or asks? That's what this is all about. And you'll also notice that right here at 52.5, that's where the number came in. This is the last 3 years. And where do you think you are? Sort of towards the upper quadrant of that. Not far off the mean, though. So it really wasn't an outlier. It didn't shock anybody. Pretty much everybody was, well, okay, whatever. Okay, let's go ahead and take a look at U.S. oil here. U.S. oil on our 920. You'll notice we had that bid developed. We called BS all over that. I didn't believe that bid for a minute. We highlighted that yesterday. I said, well, maybe if you're interested in the long side, there's your signal. And we've certainly seen this market start to fall apart the way that we believed it would. So now we've lost a handle on 58. You're probably looking at this towards the downside. Let's go ahead and do a 30-minute chart and see what's developed. And bigger than life right there. You sort of had that bid during the overnight. That would have came into play right after the UK Open. Nice big sweep higher. Nice grind. Really didn't make any money there. And then there's your money right there during the U.S. session. 30-minute chart. Sell sets up on the 920. And you're coming down and really crashing. So we're interested. We're definitely interested in the downside of U.S. oil. Fascinating stuff. I think that's a long-term bearish situation. Even though you're going to get some rate cuts, the potential for both the geopolitical uncertainty in Iran. We haven't even talked about Iran. We're going to wait till later in the week, probably Thursday, in Iran and Venezuela. There's a potentiality of being an absolute glut of oil on the global markets. We just got to take a look at that and wait and see exactly what happens. I want to take a look at Occidental, though, on the 920. We've been talking a lot about potentially the winners and the losers of the probably what I would call the Venezuela bonanza. Occidental's positioned to be a potential winner. Don't be surprised to see Occidental down in that region doing work. It's going to be all the big players are going to be there. Occidental's certainly one of them. 4-hour chart. There was our 4-hour bid right there on Occidental. That's set up on the 30th of December. And then all the big business saw the big rally and then the strikes and then the nice big sell-off. And now we're sort of settling down. So there was your bid. You're pretty much at break even. Fascinating stuff. I think this would be one of those situations where you could certainly move your stop loss up right beneath that tail and maybe limit your risk at 40.33. But if you do that, then you're probably going to take a smaller profit target. Might just want to let this one run. We're not talking about a tremendous amount of money on the line there. Only having about $1 as a stop loss on this trade if it's not leveraged out. There's no reason to do that. Just let it play out. More than likely, you're going to get a nice move to the top side, especially when things start to there's a lot of uncertainty in Venezuela right now. There's a lot of reports coming out of there. Nobody knows what to believe. Nobody knows if another wave of U.S. intervention's coming. Nobody really knows anything. The desire is there to open those markets, those oil markets, though. And my guess is anything that's necessary is going to be done. There's been reports of sort of lawlessness in the cities. There's roving gangs of Maduro supporters supposedly that are wreaking a little bit of havoc. Don't know, not there. What I can say is more than likely they're using that as a negotiating tactic, either trying to negotiate their own safe passage or they want a piece of the pie. It was made very clear that the sitting administration was going to go. So how the United States handles that and how Venezuela handles that, we just don't know at this juncture. But if Venezuela does open and the oil does hit the global markets, players like Occidental are positioned perfectly. So there's going to be winners, there's going to be losers. I would think that Oxy is going to be one of those winners, but we'll wait and see. We'll wait and see exactly how it happens. Okay, everybody, I'm going to go ahead and sign off if there's no more markets. We didn't get to crypto today, but there's not much there, just sort of a compression day. U.S. stocks, once again, the U.S. 30 is sort of flirting with 50,000. Actually, that would be a good one to end on. We'll go to the U.S. 30 here. 50,000, you can see right here. Here's the U.S. 30. There's your 4-hour bid. I'm not real big on the 4-hour chart with equities, but this is sort of a CFD. So, there's the bid yesterday, and you can see you're making another leg up. As far as what we can really expect out of the U.S. 30, let's pull up my charts here, U.S. 30. It's very simple. 50,000 is the line in the sand. That is the key level. That's the one that's going to keep everybody coming back, and that's the one that's going to get everybody involved. So I'm watching 50,000 closely right now. We're up about 470 points on the U.S. 30, about 462 on the Dow. As you can see, it's just a monster week. You're up 2.25% to open the week. 50,000. More than likely going to see a fight up there at 50,000. I'm interested to see how this develops and how this shakes down. I think we're going to test that, if not tomorrow, maybe by Thursday or maybe by NFP. Something to think about there. All right, everybody. Let me see. Hugo. Let me see. Great comment. Oh, good to see you, Hugo. Trading's not gambling because you know your risk and reward, and you have stop loss and your take profit also. You learn technical analysis. You have a range variety of tools and indicators, so not gambling. I tend to agree. Just to play devil's advocate, a lot of folks that are what you call flat bettors in sports, they look for odds that are sort of conducive to them being successful over the long term. So if you're paying 10% to place a wager, typically 10% VIG, that was the norm for about 100 years, it seems like, and now you can get it a little bit lower than that. But if you're paying a 10% VIG, that means you have to win 52.5% of the time to be profitable. Now, there's a lot of sports handicappers out there that claim they can hit in the 60s, 65%, things like that. Over the long term, that establishes their edge. And I said, well, that's great. Good for you. The problem, with that type of thinking is there's only so many games. Maybe if you knew every sport really well, that might be a way to go. But in the markets, there's so many trades to be had. I talked to a trader yesterday that was trading 15-minute charts across, 7 or 8 markets. And, it was not difficult to be placing, 25 trades a day, something like that. So 25 trades a day, it might take a sports gambler 3 or 4 months to bet 25 games, 25 good ones at least, especially if the lines are really tight. So it's a lot different. And as far as casino games, like I said, slot machines and lottery tickets, have fun with them. Where I'm from, we call them your idiot tax. If you just see it as being fun and you want to be an idiot and go buy a lottery ticket, do it. But, you can win. Somebody's got to win. Why not you? I agree. You just don't spend your paycheck on lottery tickets. The odds are not there. The odds are not there. Listen, I've gotten into this true odds thing and payoffs so deeply through my trading career and also my gaming career that when I look at the lottery, I believe the Powerball in the United States, and don't hold me to the exact numbers because I'm not sure, but I believe it's 391 million to 1. 396 million to 1, something like that. Those are your odds of getting the 5 balls and then the Powerball to win the big money. So if that thing's not going to pay you at least $395,000 or $395 million after taxes, then what's the point of even showing up? You're not even getting paid off at true odds. And that's if you don't have to split it with somebody. So think about it. If you figure that if you're going to pay a 40% tax, short-term capital gain is going to be at least 40% plus your state tax. So that thing's going to have to be up around $1 billion to even make it worth your time. And that's no kidding. Listen, $2 or $3 million is a lot of money. And if you won the lottery and you're walking around with $5 million in your pocket, you probably feel pretty good about it. But you got ripped off bad. You're not getting paid off near true odds. So I mean, I'm not even thinking of buying lottery tickets unless we're looking at $1 billion pot or something like that, because you don't get paid off at true odds. It's a ripoff. You're making the state rich. That's what happens when you trade for 15 years. All right, everybody, I'm going to go ahead and sign off. Let me see. Steven wants to weigh in on this. I think it's not gambling when following fundamentals. In December, I was able to correlate and predict the Euro USD very well to the major releases. Well, fantastic. I think that the thing about being a fundamental trader, Steven, listen, there's no BS on these streams. I'm going to tell you, if you're a fundamental trader, your ability to make money your possibility at big profits is very, very real. The problem with trading fundamentals properly is you need staying power and you need the capital to do it. Or you just dial your leverage way down and let some of these moves play out, which is great on the Forex and your CFDs. A lot of your international clients, you have CFD market access. You can dial that leverage way down and let these positions run. And that's fantastic. So if you have that kind of market access and you can do that, let those positions set there on low leverage, then yeah, fundamentals are the way to go. I mean, we have a pretty good read on the fundamentals this year. I mean, it looks to me like your dollar is going to fade as the year goes on. I would be really surprised if that didn't happen. How do you trade that from a fundamental perspective? Well, it's just short the dollar. And I go, yeah, but if I short the dollar now, how long am I going to be in that trade? Let's say I wanted to get out when the dollar index was like at 92 or 93. Right now we're at 98. How many months am I going to be in that thing? Is there a scenario that could go against me? Every single trade has a scenario that can go against you. Happened to us today in the Aussie CAD. That's life. A lot to think about, guys. A lot to think about. That's why we're talking psychology early in the year. I mean, that's really what it's all about. It's just getting yourself dialed in and ready to go. So the key takeaways from today's stream. Number one, take the money. Believe you earned it. Believe you're worth it. That's your money. You made it. No one else made it. You made it. Take it out of the market. You don't apologize. You don't feel bad, and you don't look back. You earned it. It's yours. You were rewarded for your dedication, your time, and your expertise. Just because you didn't have to go to work 60 hours a week to make a couple $1,000 doesn't mean it's not yours. It's yours. That's the first thing. Big takeaway. Number two, S&P Global PMI doesn't mean much. And number three, we're on key level watch all across the board. I mean, there's huge epic levels coming into play really throughout the commodities markets. I'm starting to see what I wanted to see out of crude oil, though. We're coming off, and we're coming off nicely, so that's good to see. Shows that Venezuela correlation. We weren't completely wrong on it. I think we make a run at last year's lows down at 54.98 for WTI, so I'm watching that closely as well. All right, everybody, I want to thank you for joining me. Let's see, Eli, so much logic, not enough time. Thanks, you're absolutely welcome. Logic's important. We'll talk about overthinking things and getting paralyzed probably more tomorrow. But remember to join tomorrow exclusively on the Switch Markets YouTube channel. We're going to be doing the 5-8-13 EMA crossover strategy. We're going to do some live scalping on really short time frames, so that might be a little bit of fun. Show you exactly how those trades are executed, and that's going to be at 1 p.m. Eastern, so check your local listings. I believe we have a link out in the Switch Markets newsletter, and that's also, I believe, we have the Switch Markets picks of the week available on the YouTube channel as well, so be sure to check those out. All right, everybody, that's a wrap for today. You have a fantastic trading day. Trade the action well, and we'll talk soon. See you.